Welcome to your daily stock market summary from MarketSnap. Hey everyone, it's time to dive into the action from today's market session. We've got a lot to unpack with geopolitical tensions, index movements, and some big winners and losers shaking things up. Whether you're in it for the long haul or keeping an eye on short-term swings, let's break down what matters for your portfolio. Stick with me as we navigate the noise and focus on building wealth over time. First up, the big story hanging over the market is the ongoing conflict in the Middle East involving Iran. This situation is driving a ton of uncertainty, with oil prices spiking and fears of inflation heating up. Reports suggest a potential ceasefire could be on the horizon, but negotiations are shaky at best. The OECD is warning that if this drags on, U.S. inflation could hit over 4% this year due to energy shocks. For us long-term investors, this is a reminder to stay diversified. Energy price volatility can ripple through every sector. In the short term, though, expect choppy waters as markets react to every headline. Some experts are even cautioning about a possible global recession if energy disruptions persist. Let's check the major indexes to see how the market digested this uncertainty. It was a rough day across the board. The Dow Jones dropped about 1%, the S&P 500 slid nearly 2%, and the Nasdaq took a heavier hit, down over 2%. The Russell 2000 wasn't spared either, shedding close to 2%. Volatility is clearly back, with the VIX jumping over 8%, signaling heightened fear. For long-term players, these dips can be opportunities to buy quality at a discount, but short-term, this kind of selling pressure tied to geopolitical risks means caution is key. Zooming in on the S&P 500, we're seeing it sit nearly 5% lower for the month, looking pretty fragile. Analysts are pointing to fading optimism around U.S.-Iran talks as a major drag. If you've got a long horizon, remember that these macro-driven pullbacks often set the stage for recoveries, but near-term, momentum is not on our side. Over on the Nasdaq, tech-heavy as always, the index burned its wings with a significant drop today. Big names in tech are feeling the heat, and with investors skeptical about quick resolutions in the Middle East, we're seeing less appetite for risk in growth stocks. Long-term, tech's fundamentals remain strong, but short-term volatility could persist. Now let's spotlight some of the large-cap gainers that bucked the trend. Energy was the name of the game today, no surprise given the oil price surge. ConocoPhillips, EOG Resources, and Valero Energy led the charge with solid gains, riding the wave of higher crude prices. Occidental Petroleum and Diamondback Energy also posted nice moves upward. For long-term investors, energy stocks can be a hedge against inflation right now, but watch for overvaluation if oil cools off in the medium term. On the flip side, the large-cap losers were heavily tilted toward tech. Meta Platforms took a big hit, dropping nearly 8% after legal rulings raised concerns about new liabilities tied to social media addiction. Applied Materials, Lam Research, and Arista Networks also saw sharp declines, reflecting broader sector weakness. For us long-term folks, these names could be worth watching if the sell-off overshoots. Fundamentals in tech often outlast short-term noise. Checking the most active stocks by volume, NVIDIA continues to dominate attention despite a 4% drop today, showing how much interest remains in AI and tech, even on down days. Netflix saw some positive movement, while Intel took a notable hit. Snap also saw heavy trading with a double-digit percentage loss. High volume often signals where sentiment is shifting, so keep an eye on these for potential setups, but always align with your long-term goals. Among the market movers, the usual suspects like Apple, Amazon, and Tesla were in focus. Tesla slipped over 3%, while Apple held relatively steady. Alphabet also saw some selling pressure. These megacaps often set the tone for the broader market, so their performance can clue us into where investor confidence is heading. Long-term, they're core holdings for many, but short-term swings tied to macro fears are worth noting. Shifting gears to earnings, it's a busy week with some notable names reporting. We've got Lululemon, FedEx, and Micron Technology among the heavy hitters. Winnebago already beat expectations with a nice revenue bump, driven by their motorhome segment, while Paychex had solid results but saw some analyst downgrades post-earnings. For long-term investors, earnings are a window into operational health. Focus on trends like margin growth or market share gains rather than just the headline numbers. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into what these companies are saying about their future. Looking at the top-performing large-cap stocks over the past week, Garmin led with a massive jump, followed by Lumentum Holdings and AppLovin showing strong gains. Energy names like Occidental Petroleum also made the list. These weekly movers can highlight sectors with momentum, useful for long-term positioning if the trend holds. On the other end, the worst performers over the week include Genuine Parts, down significantly, along with Rivian and Blue Owl Capital taking hits. These weekly declines can signal areas to avoid or reassess for long-term holdings, especially if tied to structural challenges rather than just market noise. Sector-wise, industrials and consumer cyclical stocks topped the charts for the week, showing resilience amid the broader sell-off. Energy also continues to shine with strong weekly gains, no doubt fueled by oil's rally. For long-term strategies, these sectors might offer stability or growth if macro conditions stabilize. Conversely, healthcare and utilities lagged behind over the week, with financial services also underperforming. These areas might face headwinds from rising rates or sector-specific issues, something to monitor if you're overweight in these for the long haul. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stay engaged with our daily summaries and in-depth SWOT analyses to keep your investment strategy sharp. Hit that subscribe button, drop a like, and join us tomorrow for more insights to build your wealth over the long term. See you then.